Hi everyone, welcome to my stock analysis on Microsoft. Ticker is MSFT. So Microsoft's a company that everyone's pretty much heard of. I'm interested in Microsoft because it's a company I haven't looked at for a number of years, and I'm interested to see how they stack up when I apply my stock analysis methods to it. So my stock analysis system is really threefold. First, it's understanding what they do, how do they make money, so what the business is, pretty simple. Second is understanding of its underlying fundamentals, where you're eventually trying to get to EV over enterprise value over free cash flow, which is a valuation metric, and then ROIC, return on invested capital, which is about a measure of how good the company is at deploying its capital, using its capital to make money. Third, we want to understand the company's valuation in relation to the broader market and some companies similar to Microsoft, because no company trades in isolation. Really, to know whether something's overvalued, undervalued, you really have to compare it to something else, right? So let's dive into number one, understanding of the business. What I like to do for this part is I like to open either their 10Q or their 10K. And there's usually a section that talks about the business and what they do. So so here on page 7, operating segments. I think this gives a really good overview of what Microsoft does. Okay, so they have they basically have three operating segments: productivity and business processes, the cloud, and more personal computing. Okay, so let's see what each of these businesses are. So productivity and business segments, business processes includes Office. Okay, so all the programs we're using by yours truly to do his analysis. I'm sure if you worked in an office, you've used Word, PowerPoint, right? Pretty much they have a monopoly on office productivity products. Like, I can't imagine I won't be able to do my job without Excel. Okay, so through Office 365. So they're nowadays you don't necessarily just buy like Office. It's like you subscribe to it, right? So you pay like a annual fee or something. So they've changed their business model from when I was growing up a little bit. SharePoint, Teams, all this stuff. That's that if you're not working in like corporate, you might not know these products, but we use these every day. Okay, they also have LinkedIn. They also own LinkedIn. So LinkedIn is like Facebook for professionals, right? You can use it to find jobs, to connect with your coworkers, stuff like that. It's a social network but I think it's more than that. It's actually I use it quite a bit as well. Dynamic 365, which is a set of cloud-based applications across ERPs and CRMs. This one I'm not so familiar with. I know what ERPs are and CRMs, but not super sure what this guy is. Maybe if you use this, let me know. Okay, so then their second segment is called the Intelligent Cloud, which includes Azure. So Azure is one of the major players in cloud, in web services. Okay, the other one being like Amazon and to a smaller extent Google, but Azure is killing it from what I've heard. So in the cloud services, right? So this allows like startups and stuff to just have the computing capacity and the storage that like a large company can have. It basically allows them to scale because you can just buy as much cloud computing power or storage as you need, rather than just like buy a bunch of data centers and it just sits there for most of the time. So it allows these smaller companies to scale, get access to cloud services, right? So, and they're one of the big players for sure. Enterprise services and consulting services. Yeah, Microsoft has some consulting. That's interesting. Let's see. Okay, their third segment is called More Personal Computing. It's actually a bad name because what it is Windows operating system. Yeah, everyone started that. If you're not an Apple user, a Windows user. So it also has devices like Microsoft Surface. That's like their iPad. Gaming, Xbox. Okay, so yeah, I don't know what this has to do with personal computing. It's more like gaming and devices, but whatever. And Windows. It's funny they don't include. Oh, I guess Windows is not really like an office productivity because everyone kind of uses it, even if you're not working in the office. All right, so we have a good understanding of kind of Microsoft's business segments. Okay, so with that in mind, let's jump to number 2, which is let's build our model and gain understanding of what their valuation and capital efficiency is like. So I've opened. So this is kind of my model template. I filled out the past like number of quarters, like starting from 2019, just to save time, right? But I'll fill out a year we'll fill out a year together, and kind of I'll walk through what I'm doing. So I want to praise Microsoft because instead of like typically what I do is I go to the 10Qs and 10Ks, and I have to like transpose a bunch of numbers. Microsoft Investor Relation is probably one of the most helpful out there because they have put their financial statements, I'll show you guys, on their website. And I'm just going to open it here. And it's in a very easy to digest format. And it's all in 3 months, so you don't have to do any like crazy manipulation with the data. And it's all just, you can just like click through it. It's very easy. And I wish more companies did this. I'm going to be certainly spoiled by Microsoft because other companies don't really do this. So one thing that might trip you up is it says 2020 Q4, and you're like, well, it's not December yet. Why is it fourth quarter? That's because Microsoft is on a weird calendar. So their Q4 is actually June. So their fiscal year ends in June. Don't pay too much attention to it. It's just what they do. Just remember they're like 2 months ahead of the actual what we typically think of as quarters. So just their Q4 is actually Q2. So let's see how much the revenue, right? So product is 18, services 19, 38 is their total revenue. 38,033. $38 billion. Okay, cost of revenue 12,339. Okay, so that brings us, cost of revenue is like the direct material and engineering, whatever software costs that went into generating that revenue. So their gross profit is $25.6 billion. So they have a gross margin of almost 70%. And that's not surprising, right? If you're making software, your cost is really just the software engineers building that software, and then they don't have to like incur a bunch of costs like versus like making a car, right? They can deliver that software to you online. So it's certainly software is one of the highest gross margin businesses out there because of how scalable it is. One guy making a software program, you can sell and deliver to like millions of people very easily, right? And there's not like a raw material cost really associated with it. So cost of revenue. Okay, we're on to research and development. Sales and marketing. These are what's called SG&A costs. These are operating costs, which is separate from cost of sales. Cost of sales is more like directly associated with these products. These are corporate costs, marketing costs. They're known as OPEX in the accounting world. So that brings us to operating income, and then they have other income, which is really just like it's their non-operating. It's not like it's not money they make from selling software. It's like interest income, stuff like that. So we put that under here. Okay, and then finally, if you make money, you have to pay taxes. So they have income taxes of 2220, which brings us to operating profit after tax of $11 billion. Okay, $11 billion. All right, so this is why I love Microsoft's investor relations so much, because you can literally just click here, go to the cash flow statement. It's already on 3 months for you. So from the cash flow statement, we need to put in a couple of things. CapEx, which is CapEx is basically what they pay for property and equipment this quarter. So it looks like that was 47.44. And then depreciation, that's a non-cash expense that we have to add back. So if you have questions on this stuff, like watch my Apple video, part 2. So where I kind of go into these in detail, why you're adding back depreciation, why you subtract out CapEx. Okay, and then let's the final thing is the working capital, okay, which is shown here on a cash flow statement. Yeah, working capital is like a concept that's kind of hard to understand, but what it really is, it's just like the timing of like assets, current assets and liabilities. So for example, let's say Microsoft sold Office subscription, but they're not gonna get they sold it, they made the sale, but they're not getting the cash until next year. So because the cash is not on hand, you certainly can't give them credit for it. So then that's a subtraction at working capital. Let's say they committed to paying for a service, but they don't have to pay it until later. Then you want to give them credit for that because it's not a cash outflow. And then for taxes, okay, so we got our working capital. It was a positive for Q2. So that brings their cash flow up to $12.7 billion. Not bad. Okay. Finally, we just need to add figure out their ROIC. So ROIC is equity plus debt. That's the invested capital. So debt, remember for debt, you want to add their long-term debt. And their short-term debt. All right. Current 3,749. Yep. And long-term debt 59,578. Okay. Cool. All right. So we filled out 1 quarter's worth. So yeah, let's take a quick look. Gross margin 68%, operating margin very high at 35%. Sales growth Q2 to Q2 13%. It's like they're doing very well in this COVID environment. Guessing it's because of their cloud services. Yeah, you see this? Their productivity and business. So this is like their office stuff, right? Stay kind of the same versus last year. Their cloud jumped up from 11 billion to 13 billion. Okay. It's killing it. And then also their personal computing, so Windows and gaming and stuff went up as well. So yeah, pretty impressive quarter for them. All right, cool. So Q3, see how easy this is. Good job, Microsoft, for making it so easy for the financial analyst. All right. All right. So this is Q1, also known as Q3 by Microsoft. 35 million, sorry, billion, 021. Cost of revenue, 10,975, 4887, 4911, 1273. Okay, income expense 132 of other income, taxes 2091. Yeah, once you get the hang of it, it'll just fly through this stuff. It's gonna take you barely any time. CapEx 3767 and depreciation 3118. Working capital, let's put this stuff in. 891, 181, 94, 24. All right, I put deferred taxes as part of change in working capital because so yeah, this is like going into a little more detail, but like this tax expense is not actual cash taxes. So to kind of get more close in line with like cash taxes, I want to capture the deferred income taxes on the cash flow statement. That will get you more closely to what they actually pay in cash for taxes that quarter. So that's just a nuance that you just kind of have to know. Balance sheet is the 114, 501. Debt is 3748. All right, we got that out of the way. And that's it. We filled out Q1. Just 2 more to go. I'm just so happy how easy it is to pull up their financials. 36, 906, 12358, 1235. Oops, wrong. 4603, 4933, 1121. All right. Tax expense 2436. Other income is 194. Cash flow capex is 3545, and their that's funny, they put their financing above investing. Usually it's the other way around. Depreciation is 3203, and then let's do the working capital part, minus 4203. Okay, notice that their like their AR was hugely negative. Okay, so what that means is they made a bunch of sales, but the customer hasn't paid them yet. Okay, so they have a huge balance in money that they're supposed to get later on, which is called accounts receivable. So the accounts receivable went up a lot. That means they made the sale, but they haven't gotten paid, but they've recorded it as like revenue and profits. Okay. All right. Not a great. Why is there? Oh, okay. Yeah, tough. This quarter their cash flow wasn't as good as the other quarters. Actually pretty similar to last year because mostly because of working capital. Okay, so they it looks like they sold a bunch of stuff in Q4, but they haven't received the cash, right? And then they also have a huge increase in unearned revenue as well. All right, we've all right. Okay, final quarter. That didn't take long at all. All right, income statement 33055, 10406. Tax expense. Tax expense is 2008. Yeah, another thing I can add here is tax rate. Like, what is their what's their tax rate relative to their sales? No, sorry, not sales. Relative to profit before tax, EBIT. 17%. Yeah, it kind of makes sense. I mean, the corporate tax rate is what, like 21%, and then Microsoft, I'm sure, has like some really good tax people working on kind of tax avoidance strategies. So it's even lower than like the corporate tax rate. All right, CapEx 3385. Depreciation is 2971. And sorry, what was their other income this quarter? Other income was 0. Okay. Looks like I forgot equity on this one. 106,061. Long-term deck 66478 plus 3017. All right, so I forgot to fill in the long-term debt from 2019 Q4. Or I mean, I didn't fill in the ROIC stuff. So let's do that. So I'm after the balance sheet. Liability, stockholders' equity. 102,330. Debt was 66,662 plus short-term debt 5518, 5116. All right, cool. Okay, so we got like a nice amount of data trailing a couple years, 3 years, I think. And so their ROIC is around 25%. Okay. And then their EV to free cash flow. Let's figure out what the market is pricing Microsoft at. So to do that, first if you remember, we need to first calculate the market cap, which is you want to know the shares outstanding. That's found on, I thought it was found on income statement. Yeah, income statement. So shares outstanding, basic is 75.80. All right, and let's see what Microsoft is trading at. $207.82. All right, so that gives us a market cap of $1.6 trillion. So Microsoft is its equity is worth 1.6 trillion. Bingo, that's what they have on Google. Then remember, you gotta subtract out add in the debt, right? Because like I mentioned, like a company like Hertz, right? They have very little equity, but they have a ton of debt. And to value a company, it's really the debt, and it's the equity in addition to the liabilities, the debt. So yeah, watch my Apple video if you have questions about why we do this. So debt on the balance sheet. Sorry, we want Q4. Because if you only look at equity, you're ignoring, you're not getting the full picture, basically. So debt is 59,578 plus current portion 3,749, right? And then you gotta subtract the cash. The cash on the balance sheet isn't doing anything. They can return it to shareholders. You need to give credit for companies that have the cash, a lot of cash on the balance sheet. So for Microsoft, they have $136 billion of cash, right? And let's see if they have any long-term equity investment. Doesn't count. Long-term assets. No, that's it. All right. So you see that after we factor in the debt and the cash, Microsoft's enterprise value is actually lower than its market value because it has a ton of cash. So it's still $1.5 trillion company. So what is it trading at? It's trading at 36 times their enterprise value. You notice that the multiple has been going down over time. Okay. That means that, yeah, so it's been going down. It was 36 times now, but it used to be even 50 times. So that means that Microsoft has over time been generating a lot more cash. And you can tell by their free cash flow generation rate, right? It's pretty good, like 20% in year over year. Yeah, so they're generating like 20% more cash than they did a year ago. Very impressive, actually. While their sales have only gone up, 14-15%. So that means their margins are going up, okay? Because they're selling, like, let's say they're selling like the same amount of stuff, but they're able to make more money on it. Either they became more efficient, like they're able to, their operating expenses went down, their COGS went down, or yeah, they're just charging no, they haven't been charging more, right? Because their sales are kind of only going up 12%, but their free cash flow has gone up a lot more. Yeah, so let's dive a little deeper next time, because it's been a long video, into kind of the last bullet point, right? Which is, we'll finish up valuation and ROIC, talk about the implications, and then let's look at comps and in relation to the broader market. All right, cool. Thank you.